E. China is quietly buying gold to reduce reliance on the US dollar. The critical for advanced technology, including electronics, renewable energy, and defense applications. These metals act as insurance, OT weapons. United States versus China, econ dollar dominance. Advanced D-allies. China, manufacturing powerhouse. Control over rare earth elements. Strong industrial supply chains. Long-term planning and strategic execution. HESO different models of power. Short-term dominance versus long-term endurance. Gold and silver as strategic assets, TDI chain security. Cyber capabilities, AI and data integration, satellite and communication control. Even a technologically inferior army can dominate if the opponent's critical infrastructure is disrupted. Technology comparison, United States. Advanced AI for military planning, space dominance, cyber warfare capabilities, drones and stealth systems. China, traditional battlefield wars. For centuries, wars were fought with swords, then guns, and later bombs. But in the modern world, war no longer begins on the battlefield. It begins quietly and invisibly through financial systems, market movements, and strategic positioning long before the first shot is fired. As currencies fluctuate, stock markets destabilize, gold rises, and silver spikes, signaling that something deeper is unfolding beneath the surface of global politics. This shift raises a critical question. Are rising gold and silver prices signaling a potential conflict between the United States and China? And if such a conflict were to occur, which nation would actually hold the technical advantage and why? This analysis is not about fear or sensationalism, but about understanding the reality of modern global power, finance, and strategic competition, because historically gold and silver have never caused wars, but have always reflected fear, uncertainty, and preparation. Rising when trust between global powers erodes, investors flee toward hard assets, central banks accumulate reserves, and industrial demand increases during periods of geopolitical stress. Today, global trust between major powers is at its lowest level in decades, which explains why gold and silver are rising simultaneously, not as weapons, but as insurance against instability. Despite growing concern, a direct full-scale military war between the United States and China remains highly unlikely, extremely costly, and strategically irrational for both sides. Yet anxiety persists because the rivalry is no longer about territorial conquest, but about a complex, multi-layered competition involving economic influence, technological dominance, supply chain control, cyber warfare, currency power, and global strategic leverage, where missiles may only appear at the final stage while the real conflict is already unfolding within systems, finance, and digital infrastructure. In this new environment, the battlefield is no longer physical but systemic, defined by control over global supply chains, financial leverage through currency dominance, technological superiority in artificial intelligence and data systems, cyber capabilities, satellite networks, and space-based communication, where military hardware alone no longer guarantees victory and true power, depends on resilience, adaptability, and preparation. Gold and silver are rising because major powers are actively hedging against this uncertainty. With China steadily increasing gold reserves to reduce dependence on the US dollar and shield itself from financial pressure, the United States maintaining vast gold holdings to reinforce global confidence in its financial system, and silver becoming increasingly vital for advanced electronics, renewable energy infrastructure, defense technologies, aerospace systems, and communication networks, making it a critical resource for both industrial growth and military capability. Economically and strategically, the United States benefits from strong financial markets, dollar dominance, advanced aerospace and defense technology, and an extensive network of global allies, giving it an advantage in short-term, high-intensity operations and rapid global response, while China's strength lies in its massive manufacturing base, control over rare earth elements, integrated industrial supply chains, and long-term strategic planning, allowing it to endure prolonged competition and systemic pressure, illustrating two fundamentally different models of power: short-term dominance versus long-term endurance. In modern conflict, the long-held belief that more weapons guarantee victory has become outdated, as outcomes are now determined by logistics, supply chain security, cyber warfare, artificial intelligence, data integration, satellite control, and infrastructure resilience, where even a technologically superior force can be weakened if its critical systems are disrupted. Potential conflict scenarios between the United States and China are therefore far more likely to involve limited regional flashpoints such as Taiwan, sustained cyber and technology warfare, or prolonged economic and currency battles rather than traditional battlefield wars, with each scenario triggering market volatility, financial stress, and sharp increases in gold and silver without delivering decisive military outcomes. Ultimately, gold and silver should be understood as strategic shields rather than triggers, signaling systemic pressure, preparation, and distrust rather than imminent war. And if a conflict were ever to escalate beyond economic and technological competition, the United States would likely maintain a short-term military advantage due to its global reach and alliances, while China would possess greater long-term endurance due to industrial resilience and resource control, underscoring a central truth of modern conflict. System-level wars produce no true winners, only nations that are better prepared to adapt, endure, and protect their economic, technological, and financial foundations in an increasingly unstable global order.